on this week's Bet the Process podcast. A very important, and I know that we say stuff like this all the time, and you think that I'm being sarcastic, but in this case, I'm not. It's a very important episode of Bet the Process where we talk about the big, beautiful bill and its impact and potentially the death of professional gambling and maybe even gambling with Captain Jack. And there's some very, very informative stuff about why this bill makes no sense, why it has real implications to people like Rufus, and why we should all try to talk to our local congressman to try to get it repealed or to get some of these other corrections put in place. So, with that, let's start the process. Welcome to another episode of the Bet the Process podcast. This is a long awaited podcast, Rufus. We didn't do it last week, and we saw all of this controversy around this big, beautiful bill. And we have Cam and Jack on in a minute to talk about it. So maybe we shouldn't talk about it now. But what is going on with you? Is that all that's going on with you, and all you can think about as it pertains to this? Because ultimately, it has a big implication on your livelihood. And maybe what we should do is let's just jump right into that interview, and then maybe we can actually do a little reaction to that interview.
I like that. Let's do
Okay,
that.
let's just jump in. We're gonna have Captain Jack bring him in, and then we'll talk to you guys all again on the other side. Bet the process. We now welcome in a very esteemed, very accomplished, very known person in the gambling space, Captain Jack, who seems to be not happy right now. He seems normally a chipper individual. Would call him not chipper right now. So, Jack, tell us why you are not chipper.
Been a rough week, Jeff, but hey, thanks for having me in, guys. Always appreciate the invite to my favorite podcast that's not my own. Yeah, no, it's been a rough week. It's I'm in New Jersey, so I had the double barrel here of New Jersey passed some laws that are ridiculous, and then the Congress said hold my beer and passed some laws that are inane.
Okay, so for those people that listen to this podcast that don't know what you're referring to, can we get into some specifics of what we're referring to?
Sure. Well, the federal one, it applies to everyone, so let's start with that. Yeah, I mean it's a punitive tax in that you can only deduct 90% of your losses if you itemize your losses on your gambling. And that, of course, as you get to higher and higher numbers, becomes a greater and greater punishment on your income. So the example everyone seems to want to use is you have 10,000 of wins and 10,000 of losses. You can only deduct 90% of your losses. So you can only deduct 9,000, and now you have income of 1,000 that you have to pay tax on. But when you scale that up to 10 million, and there it becomes to the point where even if you have a win of $500,000 in a year, then you are paying so much tax that you have no win. You are, let's just use that example of a $10 million gross winnings, $9 million itemized losses. You have $1 million of taxable income. Given our graduated tax brackets, you're paying about a 35% federal tax rate at that point. So you're paying $350,000 of taxes on a $500,000 win.
So if you equate this to the financial industry, let's just say very simply, you made, $100,000 on buying Microsoft, and you lost $100,000 on buying, I don't know, Apple. Very good. And you would now not be able to have those cancel out. You would essentially be paying taxes on what would appear to the IRS as a $10,000 net profit. So no one would think that that was a good idea, although that there were all these, these unrealized capital. There's just been all these ideas that haven't really made sense and ways to drive more revenue from taxes. Do you have any hypothesis as to where this idea came from? Because when you start to unravel it the way we are, and very very simple math, I've seen it tweeted out many times, it doesn't make any sense. So where do you think that this came from? And like, what are professional bettors not understanding in terms of how non-professional bettors or, like Congress people, like where do you think this came from?
All right, let's start with that basic question. And we have a lot of theories that are out there, and most of them don't hold water. So one of the first theories was the operators did this, the sports books did this to run out the sharp bettors and the advantage players. That's probably not true because this would also run out all of their high volume players. And sports books and casinos operate on a 90-10 rule. 90% of their revenue comes from 10% of their players. And that 10% are high volume player individuals where the law of large numbers grinds them up and spits them out. So they wouldn't risk pissing off their high rollers by doing this. Another myth was that it was like the prediction markets. Kalshi was behind this. Well, Kalshi already has a built-in advantage of being regulated by the CFTC, capital gains on swaps. They already have a tax advantage. They don't need to leverage a extra tax advantage against the state-based regulated gaming. Um, their regulatory capture comes from the CFTC taking no action against them. It's not with the Senate Finance Committee. So I don't think there's Kalshi behind the scenes here. I heard the religious right was behind this because this is an attack on, they hate gambling and Mike Crapo is a Mormon. Well, the Mormons dominate Las Vegas gaming industry. The Mormons have no problem with working in the gaming industry. They don't gamble themselves, but they're not opposed to it. This would potentially affect Mormon jobs. So I don't think that holds water of that it was a religious maneuver against it. I've heard that it was a bird bath, BYRD, Senator Byrd from West Virginia, long dead. He had this component that if there is a change in a budget law, that it has to be a material change. It can't just be a carryover. Long story short, we have no proof that that's what actually happened here, that the Senate parliamentarian came in and said constitutionally you need to make this change. That one's just a hypothesis. What we come down to, Jeff, is Occam's razor. The most
Oh, I love
simplest,
Occam's razor. I love
well,
Occam's razor.
well, the most simplest explanation is probably the
Can I
correct
can I
one.
get can I guess?
Go ahead.
Stupidity?
Yeah, yeah.
Well,
Unknown consequences.
Like just they were like, hey, what are some other ways that we could drive more revenue from
yeah.
taxes? Well, let's just do this because those people that are winning are just going to be happy to be paying taxes because they're winning. So they never once thought about high volume professional gamblers. They thought about like basically people that got lucky.
Yes. Now we don't know that for sure, but the Huffington Post did an article where they actually got to some guys on the Senate Finance Committee, and they were clueless. They had no idea this had even happened. Now, no one's gotten through to Mike Crapo's office. Every journalist I've talked to has a call into Crapo's office that has unreturned. Um, so we don't know for certain. There is fair amount of proof that it came from a Crapo staffer, who is the one who literally auto-penned this into the bill. But that's all we know. And so for now, I'm going on Occam's razor that this was just unintended consequences of not really understanding how gambling income works.
I spoke to a reporter yesterday who basically has put out has talked and tried to talk to a lot of people about this, and she said that she can't find anybody who's taken responsibility for it at all. And it wasn't like Crapo necessarily. It was like he's the chair of whatever committee, and so his name is attached to it.
I
But
love it when you
it's
get into really good specifics that really are helpful to our listeners. So,
thanks, Jeff.
okay, if you go back to this, where does this sit now? It's been passed by all of Congress.
Right. So it's been signed by the president. The bill
So
has
this is
become law.
happening.
Yeah, this is done. This is a done deal. And
For
now,
2026. It
right.
is not in
So
effect yet.
it doesn't take effect till 2026, the tax year 2026. Those, for a lot of people, those are the taxes you don't think about till April of 2027. But this is a done deal. And now it becomes, what are our possibilities for unrolling this?
Well, let's before we on to talk about unrolling it, what consequences do you think that this will have? Like how do you guys as like legitimate professional bettors, what consequences are going to have to you?
Well,
I use the phrase an extinction event, and it really is. Like, gambling for any kind of profit has become untenable. There's no way that you could possibly profit from gambling. And when people realize that, they're going to hate that. And the majority of people don't realize that because they don't win. You know, we have the line from last week of like, this only affects 1%. Why do you people think you're part of the chosen few? No, as I explained, it would affect anyone who's a high volume
And that
player.
was Kelly in Las Vegas or whatever that said
Yeah,
that.
Kelly in Vegas said that. But it would affect anyone who's a high volume player. But now you're probably shouting back at your podcast station saying, but Jack, those people don't file their taxes properly and it doesn't matter to them anyway, so it's no change to them. Well, they don't file their taxes properly, but at the same time, the IRS currently doesn't care because it's not a significant difference. De minimis is what the tax term for it, and basically that means it makes no difference. So the IRS is not going to go after something that doesn't have any effect on the taxes you pay. And for the majority of people who are casino gambling, their losses don't have any effect because they don't owe any money because they never won in the first place. But under this new law, you can be someone who loses less than 10% ROI and still owe some money. And now it's no longer de minimis. It's no longer that the IRS has no reason to go look after this. Now, of course, the current administration has kind of defunded the IRS, but that doesn't mean that this won't get seen as an easy win for the IRS, for them to say, we just need to find the high volume players. We know they're underreporting their taxes because they, don't lose at more than a 10% ROI, and we can pick up an easy $100,000 on a high roller who will probably want to pay this, rather than deal with the consequences. And I think that's very important to understand that that's where the impact comes to the gaming industry. That the gaming industry can't let their high volume players who might be playing blackjack, and Jeff, you know it from your days, the worst possible blackjack player is probably a -3% against the house. Peter Griffin said that in the 1980s. And
That's the number I always quote, 3% disadvantage to the casino.
right. So if they're playing at a 3% disadvantage, the chance of them being a -10% ROI over a course of an entire year, you do the random walk there, it's very small that they can lose at more than a 10.
That is gnarly. I didn't think about it that way. I guess I thought about it in the lens of like sports betting, but like the
for sure.
casinos,
Yeah.
I mean, the casinos have got to get off their asses and
Yeah.
understand how bad this is for them, right? This is like a really, really bad situation for them.
I mean, nobody's going to be wanting to play on any sort of player's card if this passes, obviously, in casinos.
Right. Nobody will want to hit a tax form, a W-2G,
No.
a jackpot.
I mean, I think generally this will incentivize casinos to overestimate your loss because ultimately, like, right, like we know that the challenge generally with casino play is that the reporting of win loss in casino play is probably not something that is at table games. It's probably you probably can't enter that into an audit, right? Like because like
Right.
it's imperfect, right?
Correct. You can only, yeah, go ahead.
Well, so
Oh, you can only,
no,
go
go
ahead.
ahead. Sorry, you're
All
the
right,
guest.
you
Sorry,
can
go
only
ahead.
use your personal log. A casino win-loss statement is not admissible evidence as representation in either an audit or an inquiry. So you can only go by your personal log of wins and losses, which you go, oh, I can just fudge that. Okay, but the downside risk of fudging when you have such a high volume of play, and trust me, the high volume of play will show itself through, the downside risk is immense. It's in the millions for some people, and
Well,
it's not worth it.
Yeah.
And the, if you go back to this, then the other way that people typically, like, I got audited once, and the audited had to do with like CTRs, right, which are cash transaction records. And the auditor literally just like added the ones that I had in versus the ones that I had out, and figured out like that I actually lost based on the CTRs. So I didn't end up getting any penalty, but like it's such an imperfect science as it is, that now if they really did want to go after it, it would be, I mean, there's probably real, if this, if this again is a law, there's a real opportunity for them. Rufus, how does this impact you? Like, I like, what do you like, let's just say that nothing happens between now and 2026, the beginning of the year. What are you going to do?
Well, so first I'm going to exhaust like all my options to sort of figure out if there's any sort of legal way to get around this. Um, but assuming there is not, and then I'm going to quit gambling.
Really?
Yeah, really. I mean, imagine, I mean, because as Jack said, I mean, unless you're returning over, I would say, I haven't actually done the math, but probably over, well, I'll put it this way. Let's say you're returning 5%. You're betting a bunch of minus 110s. You make $100, or you win $100, you lose $90. So actually, that's a little bit, I guess ROI would be 10 divided by, assuming that that's the amount risk, 190 is the amount risk, that's a little over a 5% ROI. You show a $10 profit, but you have to report income of a $19 profit. And you can obviously scale this however you want. And so 35% of that 19 is 6.65. So basically, your effective tax rate then becomes 66.5%. And that is with an ROI of 5%. Like if you're returning 2 to 3%, you're losing money. You're owing more on taxes than you made. And it would, it essentially is like basically, if you're not returning more than 4 to 5%, you shouldn't, like, you're not even going to be coming out positive. And so we work on small margins, and clearly, like, let's say I wanted to keep betting a little bit, I would only be betting a few bets that had huge edges. That would be it.
Jack, do you think that you will stop doing any sort of advantage play or professional gambling based on this?
I am reserving judgment. I am holding out hope. I am trying to be optimistic about the whole thing. But Jeff, when I hear Rufus say that, it makes me sad. Like, it makes me sad that somebody who is one of the best sports bettors that I know would walk away. Like, that's sad for this entire industry. That's sad for this entire concept of
Wait, why?
being able to beat casinos, to beat sportsbook. Something that goes
Yeah.
back and is the tie that binds the three of us together is we all have this AP mentality. And one of the best APs I know would walk away because it's just not beatable anymore. Like,
Maybe
oh
I'd find
man,
something
that's
else
just
to AP.
That is
well,
so
yeah, I mean,
depressing. I'm like really depressed now.
yeah.
Yeah. I started this call, like this pod, somewhat depressed because of life, but now I'm really depressed. Like, I don't know what I'm
Man,
gonna do. I've
can
lost
I
10
say
pounds in the
like
last week, by
I'll
the
be
way.
honest.
So
If let's say that let's say that this law does go into effect, the Fair Bet Act does not pass, um, and you know eventually something passes to undo this legislation or this provision in the legislation, but 2026 it is in effect. You know, the idea of getting like taking a year off actually seems kind of exciting.
I know it does to you, Rufus. I know it does. And that's just the way your brain works, man. And that's great. Like you might need a sabbatical. You might come back from a sabbatical supercharged. The trouble is, like, sabbaticals have like a beginning and an end, and we can't guarantee that this has a beginning and end. I can give you my probability that this will get fixed by the end of 2026 and be retroactive to the entire 2026 tax year and all that.
What do you think? What do you have that as?
I have stated 90%, that there's a 90% chance by December 31st, 2026, that a law or a measure will be in place that will make this so that you're not having to be taxed this way for the entirety of 2026. But I don't think that's going to happen by the end of 2025. So now we have this uncertainty period of January 1st comes 2026. You got to make a decision. Do you live your life thinking that this will be repealed and have immense downside risk? Or do you live your life saying, you know, I can't risk it and I'm going to take a sabbatical until it is fixed?
Yeah, that's a tough decision. So, Jack, what impact? Like, I've heard people say they think that this is going to drive people to the black market, to the offshore sports books. However,
I prefer to say the gray market.
the gray
Sounds a
market,
little less.
it's less racist.
No, it's just no, Rufus. It's just it's a little bit less because I do think it is a gray market area. It's not a black market.
Okay. Well, I was going to say though that U.S. Income tax applies on earnings worldwide, not just in the U.S. So I think that what, but I think a lot of people will find the black gray market, whatever, offshore sports books more palatable in the sense that they're getting paid in crypto or cash, or maybe they have a local bookie, right? And so that there isn't that paper trail there where, well, actually there isn't the same paper trail necessarily with US books either, because they don't issue 1099s or anything. But do you think that this is actually the case, that this will drive bettors to offshore books, to local bookies, to PPHs?
Yeah, I do. And that should also scare the regulated gaming industry into taking action here. Uh, people people don't want the paper trail in a case like this. And you are correct. Offshore gaming wins are fully taxable, but that doesn't mean that they're going to get discovered if you're getting paid in crypto. The IRS has access to uh, tax forms that get filed when you pass a certain threshold, W-2Gs, 1099s, and they have access to your bank accounts. And they can tell in your bank accounts if you've been making more money than you've been declaring. That's actually how they catch everybody, right? So people would have to keep things into accounts where technically the IRS can't get to. Now you have to do FBAR reportings for crypto accounts. So like this isn't a perfect workaround either.
What are
And you know
FBAR
what?
reportings, Jack, for those of us that don't know?
Foreign bank account
Okay.
reports. This isn't a perfect workaround either. You know, it's not, but it's something that I think a lot of people will do because people still want to gamble, right? Prohibition's not going to work. Even self-prohibition won't work. And people are going to want to find a way to make bets. The recreational that is just doing lottery type plays all the time, they're not really affected. But the high volume player, especially if the light gets shown on the glass ceiling that is now above them, and they finally realize, like, oh, wait a minute, there's no good way here. They talk to their accountant. Their square little accountant says, you know, you got to color within the lines. This is what you have to do. You shouldn't play at DraftKings anymore. They won't play at DraftKings. Then they decide, well, I do want to play somewhere. Oh, let me try this offshore place. And it's unregulated and it's, you know, it's a little sketchy, but I'm going to still do about it because then I don't have to even tell my accountant because he won't see the bank account stuff. So yeah, I mean, it's you go down that trail and it should frighten the regulated gaming industry.
Let's talk about what sessions are. And I know that they've been defined in poker. A session is when you sit down at a table, I believe, right? And then when you leave the table and what your profit or loss was during that time. In poker, you have to report profit and loss each session, which is, and I would assume it's the same for blackjack. Right, so it's not each hand you won or each hand you lost. Is there a way? I know that session hasn't really been defined in terms of or clarified by the IRS for sports betting. Is there a way that you could maybe say the session is the college basketball season at FanDuel, or um, is there any hope in that regard?
I do think you will find some very liberal interpretations of session in, you know, if we have to go through 2026 like this. You're right. The IRS has not given us formal guidance on how sports betting has sessions. From other casino games that they have talked about, it's like when you go someplace to gamble and when you finish your gambling at that place, that is a session. So, you know, you could play slots in a casino for an hour at the Bellagio, walk next door to the Cosmopolitan, play slots an hour there. Those are two different sessions. We don't know what they would be for sports betting. Now, will there be some bettors who go, oh, here's my solution, Jack. I'm just going to make my whole year a session. I never stopped gambling through the year. It was one big session. Yeah, that's pretty liberal. There are others that say it's a game. So in other words, like if I have multiple bets on a game, I can cancel them out, or I can, you know, net total that session of a game, but that's the session. I don't know if we want the IRS to give us the guidance because I have a feeling a lot of people won't like the answer.
But at the same time, if you don't have the guidance and then they rule that a session is something that we don't want it to be, then the downside is so big. Like, I mean, think about this, Jeff. Let's say
no, but this is starting to feel like the unrealized gains thing, where
it really is.
It's like impossible to actually define how you pay taxes on this stuff. It's like, what is losses? Like, it's like if everything just nets out, right? Isn't that just a win? At the end of the day, you didn't actually lose. So what does that even mean? So it's like, oh, it's like, yeah.
Well, Jeff, I mean, here's the thing. If you read the articles that, like, I read a few articles last week on this legislation. There was like a New York Post, there was a Washington Post one, and I read the comments. And most, I feel like half of the people commenting said, oh, you know, this is good because like people shouldn't be able to deduct gambling losses anyway. That's the taxpayer shouldn't be funding your gambling, like not understanding at all that nobody is actually getting money back on their taxes because they lost at gambling, right? And the other half of the people were like, gambling's a scourge on society. This disincentivizes it. That's really good. But if we want to disincentivize gambling, like this isn't the way to do it. I mean, it's because the action and the consequence are so separated. You're not thinking, your average bettor isn't thinking about filing taxes a year later when they're putting in a parlay at like 10 p.m. There's ways to do it where you link the action to the consequence. Like if there is a tax on a bet when you place it, that is more likely to disincentivize betting, right? And so it's amazing how misunderstood this is. But Jeff, I think your analogy about only being able to deduct 90% of your your capital losses, I should say, on investments, and it having to, but for each individual investment, is a really good analogy. And I kind of wish I had thought of that. I was talking to a reporter yesterday and I said, my analogy was if your investments were marked each day, so if like Apple stock was $200 and it goes up to $210, that's a gain of $10, right? And then it goes back to 200. That's a loss of $10. And if you did it like every single day like that, it would make investing untenable for people. But I think your analogy is actually much better.
Which analogy?
Oh, if
stock sale,
you can't, the stock sales, you can't deduct.
Yeah.
You can only deduct 90% of your.
Well, I just think that
stock sale.
The concept is like in gambling, the fact is like the concept is so arbitrary, meaning like what, in the finance world, you could define some accounting rules, right, on like realized gains and do it based on different positions or whatever like that. But like in the gambling world, we just talked about it. You're not going to do it on every hand. You really shouldn't be having to do it on every bet you make. Like that's just weird, right? So it's like, what does that actually mean, and how does that accounting work? And anything where, like, I'd love to like actually ask them what's the accounting guidance on how we're supposed to do this with all different facets of sports betting that there are, which there are a lot of different ones, and they're not gonna. It's like it's so poorly thought of. Jack, you talked about the AGA and their reaction to this, like were they just also Occam's razor stupid about how this stuff actually works, or like why do you think they were supportive of this?
Yeah, well, first we got to go back to what the AGA's job is, right? They represent the operators. They don't defend the bettors. They're not the American Gambling Association. They're the operators, right? So they're not defending us. And Their job to the operators as lobbyists, as paid mercenaries, are to find when there are potential changes that would affect the operators and alert them to it or dissuade those changes. These changes were published by the Senate Finance Committee on June 16th. Nobody noticed, but the AGA didn't notice. They didn't do their job and notice this. And so when this went through, the AGA had to decide, well, what's our tact if we're already a day late? And it appears that their tact was say nothing for now and don't create a bipartisan riff. No, a partisan riff, rather, because they didn't want to make it so they come out against the Big Beautiful Bill Act and then have it be very much divided by party lines in the country. They would rather approach it from a bipartisan approach, which is to come out and say, okay, yes, the bill is the bill, and we applaud that it passed, and then try to attack this one line of it by supporting the Fair Bet Act and supporting the one that'll be introduced in the House, in the Senate, which is called the Full House Act. Do I agree with that approach? I don't know. It's one of those things where they were for the bill before they were against it, and they were against the bill before they were for it. It's no matter which way this lands, they can take credit.
Okay, so
I mean, it does make
what are the
sense. I mean, if you think about what works with Trump in general, it is flattery, right? And if you antagonize him, that isn't generally the best way to get ahead. And
I
so
think you're
is it
giving too
possible
much
we're is it
credit here,
possible? No,
Rufus,
is it possible we're all overreacting to this and they're just playing the politics game?
on the AGA side.
Yeah.
Yeah, that's a definite possibility.
So
That's a definite
okay, so what are now the recourses? You mentioned a couple things that were coming in. Can you tell us a little bit about what those are and how they might solve this situation?
Yeah, so okay, first we had Dina Titus, who is a representative of Las Vegas in the House of Representatives. She came out and said, this is unfair. I will introduce legislation to repeal this. Dina Titus is, a very capable congresswoman, but like she's introduced other bills related to gambling. She tried to get the WTG threshold raised. She's tried to get the federal excise tax on sports betting eradicated. None of that has been successful. So, hopefully Dina Titus is successful in this. The thing that gives me a little bit of hope is she has bipartisan support. Jeff Van Drew, who represents Atlantic City to the House of Representatives and is a Republican, is a very Trump-leaning Republican. He supports this, and we're starting to see a lot more bipartisan support. And so she has what's called the Fair Bet Act, and basically it just changes that one line from capped at 90% to capped at 100%, and bing, bang, boom, we'd all be fine.
What if we did like 110%?
Right? I mean, what if we didn't tax gambling?
Basically, that's just
do you know
like,
what's interesting is that the UK, Canada, I believe almost every other country does not tax gambling earnings.
Right.
Income.
And on top of that,
because you're basically, I don't want to say you're double, sure, I definitely see the argument for taxing someone that does this for a living, but your recreational bettor, like let's say he loses like $5,000 most years. In 1 year, he makes like 10 grand. He hits some big jackpot. He has to pay tax on those 10,000. He can't deduct the 5,000 he lost each year against that, right? And so it just makes gambling an even worse bet if you're a recreational bettor.
On top of that, Rufus, I'll add that gambling flourishes in countries that have that enlightened view of gambling winning taxation, and gambling suffers in countries that have erroneous tax structures. Mexico, for instance. Mexico has a handle tax on sports betting. Who do you know that says, I'm going to Mexico to bet on sports? France has a handle tax, and everybody complains about French sports betting.
A handle tax on who? For operators?
That is on operators, but it gets passed through to the players. Mexico is on the player that has to pay the handle tax. Spain has actually, in the other direction, they have some laws that are too favorable to players, and that's hurting sports betting. So there is a delicate balance here. It's not like we just say, hey, you just got to go all the way to this side and everything's good. It's a delicate balance.
Okay. So what is the Fair Act says 100%, Fair Bet says 100%. Is
Right,
there
just
something else?
basically reverses it back to what it should be. So then there's a Nevada senator tomorrow is introducing the Full House Act. That's an acronym as well, but it basically does the same thing. That's going to be introduced by unanimous consent, which means they read the bill on the Senate floor. If nobody objects, it becomes a process of the bill to go to law. Dina Titus says that that is not binding, that process has to begin in the House and go to the Senate. So there's a little bit of, I didn't pay enough attention in my 10th grade civics class to know exactly what the parliamentary procedure is here. But those are two things that are working their way through the system. But Jeff, Rufus, you guys both know these things aren't like snap your fingers and done. These things are months long. They have to go through committee. You have to basically have favor with the committee chair to even get it to pass through the committee. Then it's got to go for floor vote and debate. And so I don't see any of this happening in 6 months. Now, the thing that I do have hope for that could happen within 6 months is what's called a technical correction. And this is like somebody saying, oops, that's an unintended consequence. That's not what we meant by that. We need to change the wording of this because this isn't what we had intended when we wrote this. And if this were to come from somebody on the Senate Finance Committee, this would be a done deal. Basically, everyone would say, well, the people that wrote it said that they made a typo or made an error, and let's definitely correct it, and it can get passed through. That is the best.
They need whiteout for that? Do they need
yeah, pretty much. That's pretty much what it is. It's just like a, never mind about that.
Who like, just kidding, do over. So who was the one that discovered this? Like, when was this first discovered that this was in there? Because it was like nobody knew this was in there.
Like a 1,000-page bill, right?
Yeah.
Yeah. So Russell Fox just heard about it. Russell Fox is the famous tax accountant that a lot of gamblers use. He heard about it. He wrote a quick blog about it, but he hadn't seen the actual wording. And when he originally wrote about it, he said that losses are capped at 90% of winnings, which is not what it is. It's 90% of losses. But he wrote about it. Richard Munchkin tweeted about it, and I wake up in the morning and I see a tweet from Richard Munchkin about it, and it's got no engagement. It's got no likes, no retweets. So I'm like, well, you know what? I better tweet about this. So I tweeted.
You went on a Blue Sky and you got more on Blue
I
Sky?
probably could have, but no. Right. So but what really took off was when Phil Galfond made a TikTok or whatever about it, and that went viral
TikTok.
Because that was what people needed to see. They needed to see like explained in basic detail of how it affects them. And of course, it does affect poker players far more than sports bettors.
Far more?
Yeah, because they basically, if you're a poker tournament player, you enter a lot of tournaments, you lose a lot of them, and you win rarely. And that lose, lose, lose win is really detrimental for if you can only deduct 90% of those losses.
Well, poker players are in a more disadvantageous position than sports bettors because there's so much variance with tournaments. And if you have a losing year, you can't carry that forward. You can't carry like you can for capital gains. If you take a loss, you can carry some forward to offset a few future wins, right? And so it's the tax man is not friendly to professional gamblers like currently, and it's certainly going to be a lot worse.
I mean, they're already a silent partner, right? They are, we want a piece of your winnings. We don't really care to share in any kind of net loss for this business that we're a silent partner.
They got a free roll. They're like the ultimate free rollers.
Yeah.
Rufus, anything else on this? It's fascinating stuff, Jack. This was awesome.
No, I actually was working on Saturday morning. I spent like most of the morning working on an op-ed, and I talked to our friend Michael, who gave me a contact at the New York Times, and I reached out, and they said that it's not a good fit for them right now, unfortunately.
I'm going to try to go on a Kornheiser show and talk about this, at least so there's like a mainstream audience that's hearing this. So I mean that it sounds like we all need to do our part.
Yeah, I mean, I think that's the big thing. That's what I got from reading these comments, just how widely misunderstood it is. And so that's and the public has no sympathy here. But at the same time, it's really unfair. And taxing phantom income, I don't think anybody's okay with. And so I think getting the word out will put more pressure. And I'm hoping to shop this op-ed and maybe get in the Washington Post or Wall Street Journal or something. But
maybe the Worcester Telegram and Gazette.
Ooh, do you have a contact there, Jeff?
I don't even know if that's still a paper. So
I didn't know that it ever was.
It was. That's my hometown paper. I used to deliver it in the afternoons. It was an afternoon newspaper. The Gazette was the afternoon paper. Back in those days, they thought they needed two versions of the paper, one in the morning, one in the afternoon.
It's like the Alexandria Gazette packet. That was the.
Yeah. All right, Jack.
Well, hey guys, real quick, if I can, let me give just a couple tips for people listening to this, what they can do.
Go for it.
Okay, so first is to spread the word to other people that might misunderstand it the way that a lot of normies seem to do, where they don't understand what this effect. And I think Jeff's example there of using stock sale is a great example that anybody could relate to. Definitely try to make it realize that the more you play, the law of large numbers dictates you're going to lose close to what the expected return on a game is. So just saying that people lose and that's the end of it, that's not quite true, because if they really tracked how they win and lose, they would realize they lose less than 10% ROI, and as a result, they would pay extra tax under this. The second thing
they would lose and pay tax and owe taxes.
Yes,
and probably not pay them. But they'd be filing
we covered this like half an hour ago. Rufus.
Yeah, I know. I'm just highlighting this. Like that's it's. I think this needs some emphasis.
Welcome to the conversation.
Number two, though, does it matter to contact your representatives in Congress? Hey, does it not? I don't know. But does it really take that much of your time to do so? There are so many different places out there. We're actually working on a little mini widget at Unabated where people can come and it'll send the email for them to their representative. And at least it lets them know that somebody out there gave a damn. And if that's the least you can do, then that's the least you can do. But spreading the word among people that might misunderstand this is key. And just as an example of that, New York State introduced a bill where they would allow 0% itemization of gambling losses. You can't deduct any gambling losses. And the reasoning for that bill was only the wealthy itemize their deductions, and we don't want to give the wealthy a break on their gambling. I mean, that's not how any of that works, but people don't realize that. Now, will that New York bill make it through? I don't think so, because I think smarter heads will prevail, but that's the thinking, right? So you just got to work at changing the narrative that people believe is related to how gambling, winning and losing works.
Okay.
Jack, we didn't even get to the New Jersey bill that passed. Yeah. That also depressed you.
That's even worse. The fact that we could have a conversation on this podcast and be prosecuted for that conversation because of our conspiracy to partner on a bet in New Jersey. Man, it's horrible, but
we'll leave that for another time. We appreciate it, Jack. Thanks for joining us.
Thanks, guys.
So that was our interview with Captain Jack. Fascinating. I think last week when you mentioned needing to do an emergency podcast on that,
now I was
like, yeah, well, you know, what are we gonna have to say or whatever? Like, who wants to hear? But like, now that it's had a minute to like percolate and germinate, I think it was a pretty interesting conversation to hear, because he clearly has been thinking about it 24/7. So how do you feel after hearing him? And, you know, really you kind of made that tweet about like, what should you do with your life? But like, how is this impacting you right now? Or do you think it will get fixed? Like he said, you know, 90%, like people are logical, like this will get sorted out.
I'm just continuing operations as is right now. You know, obviously it wouldn't go into effect, doesn't go into effect until next year. So have to, maybe there's even more urgency this year. Have to make more money this year, because the money train is going to come to a halt at the end of the calendar year. At least that's, as of now, that's what it looks like. But I'm not super stressed about it, just because there's nothing I can really do. I mean, I guess there's a little bit I can do in trying to spread awareness, but outside of that, it's out of my hands. It's like a bet, right?
No, I can actually influence bets by watching the games.
Well, this is Yeah. Do you have like, if Charlie is sitting in the correct seat, or
I mean, Charlie himself could be out there, fixing the event. I mean, I can't wait to have lots of money riding on Charlie in the games that he's
are you
playing
gonna
in.
are you gonna bet on his like flag football games?
Am I going to?
Are you already betting on them?
Have I maybe already done it?
Are you claiming those? Are you deducting losses from
You know
those
who I
bets?
you know who I coached against in one of Charlie's flag football games? Igor Olshansky. Do you remember who Igor
Oh,
Olshansky was? Yeah.
hockey player, right?
No, he was a
No.
huge defensive tackle.
Oh, okay.
I think he played
Recognize the
with
name.
Detroit and played with the Cowboys. But he
I
was on
recognize
he
the
was
name. It just sounds like a
he's
hockey player.
famous. Like
Yeah.
he I think he bench pressed like 560 pounds at Oregon. He was the opposing parent coach to me at one of James's games, actually, not Charlie's games, one of James's games. And he and I got into a little tiff on the sidelines, and I probably realized that was a bad bet for me.
What happened?
Uh, on the first play of the game, they scored a touchdown, and I said something to the ref because the kid clearly flag guarded. So in flag football, you can flag guard, which is like someone goes to grab your flag and you hit their hand away. And I wasn't arguing with the ref. All I said was very simply like, "Hey, let's just watch flag guarding." Because I just don't want the game to be
You just
decided,
want the game to be fair.
Yeah, yeah. I wasn't like I'm not one of those people that yells at like refs at kids games. I was just saying, "Hey, let's keep an eye out for the flag guard." And he goes, "His flag was flowing in the air," like meaning like he was nowhere near it. And then there was
Wait, how old was the ref, Jeff? Was the ref like a teenager? Like
high school
7?
age,
Okay.
high school age, yeah,
Okay.
high school age, yeah, yeah. It wasn't
Oh
like
man.
I mean,
Uh,
again, maybe I probably shouldn't have said anything. Fine, I probably shouldn't have said anything at all. That's fine. So maybe I should just leave it at that. Maybe I should
look,
just drop this
can I just
story.
say, like, I was a Little League baseball umpire and a youth soccer referee in high school, and I absolutely loved it. And I loved when parents gave me crap because I got to, like, I was the authority figure. I got to tell them to sit down and shut up and that they were wrong.
I mean, I just don't think that these refs typically have a lot of knowledge of the rules and aren't always thinking about the rules. So if I want to
I
just
mean, you're a
like
ref. Like, that's what you're supposed to be doing. That's your
I
job.
know, but I mean, again, I think there's a world where like a parent should never say a word to a ref. So maybe that's the world I should live in, and maybe I should just shut up right now. But I just and then we had a couple other issues. There was one where the ref literally lost count of the downs.
Well,
He
that's a
said it
problem.
was he said it was fourth down and it was third down, like, and Igor Olshansky knew I was right, and he didn't say anything. He didn't actually say, "Oh no, he's right." Like he didn't say anything because earlier there had been a play where this is no one cares. We've gone from 7 listeners to 2 listeners now, but earlier there was an out of bounds play where I may have been able to say anything, although I don't think it was as clear as counting the number of downs. Anyway, so that was the 7-year-old football game, and if you care, we won. My son James threw like 4 touchdown passes in the second half, and we ended up winning by 2 or 3 touchdown
Yeah,
passes.
suck it, Igor.
Yeah, suck it, Igor. No, I don't want to.
You're not
I
even a
might see
hockey
him again.
player.
I might see him again. Anything else to say on this, or should we just call it a podcast?
You know, not much. I mean, it's really unfortunate. And it feels like we need to elect like smarter lawmakers.
Hmm. Yes. Hey, we should do our podcast for the Open Championship on Monday next week. And
Okay.
also, I need you to price. I'll give you the players to price, but we're going to try to do that pricing no team Troon because we're trying to promote Troon access. Oh, and we need to talk about our golf event because the
We
golf
do.
event is happening at Silverado in August 23rd and 24th. There's a Troon charity event on that Sunday. But the Saturday before, we have a bunch of tee times. And I think if we can get enough listeners there to do the charity event, we'll do the event the day before. And Rufus and I are going to do a Ryder Cup event where we draft golfers to be on our team for that Saturday event. So if you're interested in that, DM me. Some people have DM'd me already, but DM me again and I'll send you all the info. Sorry, I've been bad at responding to that. And we'll go from there. So
That sounds good.
All right.
That's all I got.
Talk to you guys all next week, which is a majors week. Woohoo!
Bet the process.